What's up, guys? So back again trading. Let's see. I took off half the week before the fourth, and then I didn't trade the week of the fourth, given just the small week it was. And I had my mom here last week, so back at it again this morning with this market review. So this morning I was looking at this range here on the 1 minute, and I saw an opportunity to possibly short here, get short around this area, this pullback. Well, from this pullback, I was looking to get short. I defined my ranges earlier in the day based on volatility, which um, you can read about on um, my website, joerodtrades.com. Down here is the bottom range volatility. Here's the top range. I know when we pass up these ranges, basically oversold or overbought. So that's my way of indicating that. But earlier in the morning, I saw we were at the top end of this range. I waited. This was after I got triggered in the trade, like up here. Just so you can see my loss. I lost this trade. But I was looking on the 5 minute. The 5 minute didn't line up very well with it. We were also pretty well above higher time frame sell areas, so it was going to be a riskier trade. But knowing how well these volatility levels play out, and that price has a 17% chance plus of returning into this area for my data, I decided to take that short and didn't pay off. But I waited for a price to reverse. What I'm seeing here, let me grab my brush tool. There's some climactic activity here, and then I believe there was an anti-setup right around here that you could have taken, and I actually called that out to a buddy of mine, and that would have paid really nicely back into this zone, this range. But I waited for this right here, and I cleared. I took a 2.3 to 1 risk reward ratio here, paid off nicely. I was looking to get short again here towards the end of the day, but knowing price kind of reverses, and I didn't know if we were going to blow out my stop before we came back down, and it looks like that would have paid off nicely, but I never got triggered. I took this trade off based on these candles forming. These two candles formed, this nice big green one and this one as well, and I just took the trade off, but that would have paid out very nicely as well. And going with my theory, I should have had I should have just left it on, because knowing that we would get back into this range eventually, I just was worried about stop placement and where we might get knocked out of that trade. I didn't know if it had to be further up, but it looks like that would have paid off nicely. Now, another cool thing that I did today was I called out this level here. You can see this line here, and I called this out at around 10:30 my time, which is 12:30 Eastern. And I basically said this is going to be the low end of the range, and we hit that almost to the tick. We went one tick past it. I knew that because of my opening range study that I'll be publishing soon on the website. Basically, what we did was we came up past this 11 o'clock mark, which is a 90-minute opening range. We took out 7 points from the top here, and the whole range, so I subtract that from the total range that the 90-minute range can create. And since we reversed back down, and I knew we were going to close within this level, I took the remaining of that 25 point range, and I brought it down to this level. And that's how I got close to that. It's pretty impressive being able to kind of tell the direction of the market based on volatility and the 90-minute opening range itself. And this proves to be pretty accurate. I had a 53-point range on the day that I calculated, and you can see I'm off by one tick here. This would have, if we kept running up, this would have been the higher end of that volatility range. But the minute we started reversing down, and I knew we had to close into here. The potential was more likely that we would reach to the bottom here, and we did. So pretty impressive stuff that I've been working on lately. Super happy with it. I'll be using this to kind of frame my trading days.